My fear is that we're going to be in this long, drawn out recession. And eventually it's going to get so bad the Fed will start to print. And that's where the dollar falls. That's where gold and silver and metals start to really rip. And in all fairness, I think that's where Bitcoin starts to rip as well, where people. I'm still in the camp that Bitcoin's got more downside. Again, whether it's 12, 13, whether it's 10, whether it's 15, we'll see. I'd be hard pressed considering the situation with the Fed, with the inflation. This is that first cycle, the first bear market cycle for Bitcoin where the Fed has not been printing money. And I think you have to take that into account and say, well, why would this cycle be less downside than past cycles, which are been 80 to 85%? So to me, it makes me even a little nervous, like it could go lower than 12, 13, which would be 80 to 85%. So hopefully that doesn't come to fruition. I'm going to start accumulating, continue accumulating in the teens and the low teens, even down below. But I would love to see a bottom sooner than later. But I got to just say to myself, what are the charts saying? The charts are still saying downside. So let's take a look at Bitcoin's chart right off the bat here. Yesterday was looking good. We had a nice bounce. The dollar was falling a little bit. Today, the dollar started to gain strength and it just smoked Bitcoin. And let's be fair. I mean, Bitcoin's not alone here. We know the stock market, anytime the dollar goes up, the stock market is pulling back as well. Basically, any risk assets, which primarily are technology, but also S&P stocks, Bitcoin, crypto as a whole. And that's really what this is at this point. I mean, you look at the dollar, the DXY, and you can see this inverse relationship. And that's not the DXY. There we go. So this is the DXY. It's been in this channel. You see we hit it here. We pulled back. We're kind of just chopping sideways here. You could make a case it has a double top, but it does concern me that there's still a chance the dollar could pop one more time into this upper band before it starts to come back in. So again, Jerome Powell, he was out there on last Friday with Jackson Hole, and he just smoked the market by basically being extremely hawkish. And that we saw Bitcoin drop. We saw the stock market take a massive dump as well. And this is a market, again, that is worried that, number one, Jerome Powell is going to push us into a steep recession. But number two, they're also worried. They want the free money. They want the drugs, right? The drugs was just printing. Yes. And the Fed is talking a tough game right now. But the bottom line is, no, I don't believe them. I think they're talking a tough game. They don't like the fact that the stock market off of its lows rallied 20% in a couple of months. That is inflationary. It makes people feel richer, then they spend more money. So they want to talk the stock market down. That's why what we've seen happen has happened. But I do think that the Fed is at a point where they're going to raise 50 basis points in September, maybe another 25 by end of year. And then I still think the economy is weakening very quickly. It hasn't shown in the jobs numbers yet, but we have a big jobs number on Friday. I want to see what those numbers show. If it shows weakening, then I think the market actually might rejoice and rally, which is really messed up, right? I mean, we're seeing good numbers, good economic numbers, and the market is selling off. The market wants a weaker economy, so the Fed gets on the sidelines. So I think it's a combination, right? So the Fed, by raising rates, is sucking money out of the system, right? Think about a vacuum. It's going back to economics 101. Less dollars in the system, then the dollars are worth more, right? So that's why printing of money, the dollar should go down. They're doing the opposite right now. The dollar goes up. Then you also have Russia. That's a concern globally. You have China and Taiwan. That's a concern globally. And what we know is, historically, if people are worried about geopolitical events, they go to the dollar for safety. Yes. Now, a lot of people don't understand this, but they're like, oh, but the dollar, it's been printed. We got so much debt here. Yeah, but you know what? Every other country's in the same boat. We're still the ship that's floating the best with holes in our hull, right? So it's still the best out there, and so people are still going there for safety. Yeah, so I think the higher the dollar goes, the weaker the economy. So I think this is absolutely this inverse relationship. And a lot of people, I mean, listen, for average Americans, a strong dollar means we can go to Europe and it's cheaper for us to go to Japan. I mean, our dollar goes further. The negative is, for the economy, is that a company that sells in countries, right? So let's take IBM. IBM in their last conference call said they took a $3 billion loss due to currencies. And what that means is that they're selling something in Japan and they're getting yen, And by the time they convert it back to dollars, the dollar has strengthened and they're getting less dollars for that. So for instance, it might be a 10% revenue haircut just by that conversion taking place. And so that's really the negative, how it's hurting earnings. And by default, it's hurting, these companies. And therefore we're seeing stock prices also go down. Generally, I think the mid to long term is hugely bullish for gold, but right now a rising dollar is a negative, right? So we know historically yields, the interest rate going up is usually a negative for gold because gold is versus the bond market, right? So if you can get 3% free, tax-free munis or whatever it is, or government bonds, well, you have to put that against the safety of gold, and therefore gold generally sells off. When the dollar goes up, gold is traded in dollars, so the price of gold goes down. Now, again, I think that by the end of this year, you're going to start to see the dollar fall. People are going to start to realize, investors are going to realize that the Fed is out of bullets, right? So we're going to get into a recession. And how is the Fed getting us out? Because every recession for the past, let's say 20 years, the Fed has just said, oh, well, let's just print money because inflation is under 2%. Print it, print it, print it. That gets us out. Well, guess what? Inflation's not going to be under 2% by the time the next recession hits, whether it's this year, next year, or the next year after that. So the question is, when we get into a recession, how do we get out? My fear is that we're going to be in this long, drawn-out recession. And eventually it's going to get so bad, the Fed will start to print. And that's where the dollar falls. That's where gold and silver and metals. My fear is that we're going to be in this long, drawn out recession. And eventually it's going to get so bad, the Fed will start to print. And that's where the dollar falls. That's where gold and silver and metals start to really rip. And in all fairness, I think that's where Bitcoin starts to rip as well, where people finally realize the Fed has lost control. They've lost all credibility. And then you see these assets start to take off as safety measures. I do think Bitcoin will decouple and it'll become more like the digital gold. So this is the gold chart we see before us. But I do think that at some point you do see this change where Bitcoin has been historically that, risk asset. It goes down when markets go down. I eventually think it's going to switch into more of a gold where it goes up when things are scary. Now, this is the gold chart. And what's amazing about the gold chart is, number one, it's still the best performing asset between Bitcoin and the stock market for the year. I think it's down about 4% or 5% on the year. But basically, look at this trend line. Pivot high, pivot high, pivot high. We broke out. We tested this line again. Now we're testing it again. I think gold's a buy here. I think you're above this line. I think you're going to start to head up. You could even be forming maybe an inverse head and shoulders here if we start to trade up. And again, I like gold here. I think it's a good play. It tells me that the dollar may be topping out. And by the way, that's another important point to make here. So think about this for everyone watching. Last Friday, Jerome Powell, probably the most hawkish he's been ever, right? I mean, it just crushed the market. NASDAQ was down 4% in a day. That's a huge move. And everyone's like, oh, he's so hawkish. They're going to raise by 100 basis points. They're going to continue to raise. Well, go ask the bond market if that's true, because the bond market is the biggest, smartest investing market out there. And you know what yields did on Friday? Nothing. And what that tells me is the bond market is calling Jerome Powell's bluff and saying, no, we don't believe that they're going to be able to raise that much more. And if we go to the 10-year yield, here we go. This is the daily chart. We're not even back to the highs from June on the 10-year yield. That's calling Jerome Powell's bluff and saying, we don't think interest rates are going to go much higher from here. Again, I still think 50 basis points in September, maybe another 25 later in the year. I think that's it. And I think the bond market's confirming that. It has the biggest money. I mean, trillions and way more than the stock market is in the bond market. And so they tend to look at it as like, this is where the biggest smart money, the institutions hide all their capital. So it's going to have the best knowledge versus the stock market is kind of in between, where you have a lot of individual investors, but a lot of institutions. And then the crypto market's like, that's mostly just retail, right? And that's why it's so volatile. But the bond market is known as the smartest market out there. Look at the perfection of this. So if you connect this low to basically through here and through this low, and then you do a parallel line to this high, look at the high on the invasion. I mean, talk about the charts just dictating the max price and telling us that. You had the pullback, then the bounce, and then we've seen oil coming down. I still think oil comes down even more this year. In fact, if I throw up a trend line, this is my target on oil by year end, which is about $75 a barrel. So, you're looking at more downside here. Doesn't mean it can't bounce a little bit. But for me, if we get big enough bounces, I'm shorting oil. All right. You can't
Right.
tell me that if the economy's slipping into a recession, and if we're going into recession, then Europe's going into recession. Then I mean, everyone's going into a recession. And you can't tell me that demand for oil is not going to fall. At some point, you're going to see some resolution with Russia as well. In addition, let's be fair, Russia's selling all their oil anyways to the open market. They're just selling it to China and India, right? So I mean, it's not like you know the U.S. and Europe's like, oh, we won't buy their oil. Well, they're just selling it to someone else at that point for a discount. So it's all ending up on the open market. And again, to me, that spells economic slowdown. Oil still flowing out there. Oil's going to go down. Yeah, so the S&P has had quite the dip, right? I mean, we've seen, especially, I mean, it was starting to pull back a couple weeks ago, but then obviously Jerome Powell's really comments, he really threw a wrench and caused a massive exodus
Yeah.
of capital. But I will say this is that overall, you know, I do think midterm you're going much, much lower, but short term, I actually think you're getting close to some supports on the S&P 500. If we take a look at the chart here, so number one, look at the high. I mean, this is where charts, Paul, I mean, you know, I'm a chart guy.
Yeah.
How do people not look at charts? I mean, connect this top here, which was the all-time high, to this, and it gave you the exact high of this huge bounce. Not only that, but throw in your 200 moving average, and look, you went right to the 200 moving average right here as well. So I think that's remarkable. And the question is, as we're falling down here, where are we going? I think this is where the S&P is going to go short term before a bounce, right around 391 on the SPY. We'll probably bounce there, maybe coincides with a dollar decline. And then I think the next leg finally takes us down and takes out those lows. I still have a target on the SPY or the S&P 500 much, much lower, basically the pre-COVID highs. So I think the pre-COVID highs, we have to revisit that. I don't know if it'll be by year end, but I think it's very likely by year end or early 2023. Yeah, so we could do Ethereum to Bitcoin. Sure, absolutely. Let's see what we got here. So, and again, I don't usually look at this chart. So this is going to be the first time I'm looking at this chart. I usually look at it in terms of dollars. But basically what you can see is you basically got this almost pseudo triple top up here. And now what's intriguing about that is that triple tops, the more you hit a level like this when it's a triple top, the more likely you get a breakout.
Yes.
So what this could tell us is that you might see Ethereum versus Bitcoin actually make a big move here. Maybe that coincides with the merge. We'll have to see, but it certainly is an interesting chart here. And you could even argue that you have this lower channel as well, right from here. So you have a kind of a pivot low here, here, and then over here you kind of pierced it before this recent move. But this looks like a bullish pattern to me. So it wouldn't shock me to see Ethereum start to make a move to the upside, assuming you get the breakout, right? So again, we always as traders, we don't want to jump the gun because sometimes we can get caught with our pants down in that scenario. So we want to see if it breaks out, then yes, I think that's the play where you're going to get Ethereum to start making more market cap or advancing its market cap versus Bitcoin's market cap. So Matic actually percentage-wise, and this is one of the things that I've liked about Matic is that it has held up better, right? So we see Bitcoin testing the 19.5-ish area, only a 2,000 off of the 17.5 recent low. And I know I have a lot of charts lines on here, but what I like is that you're way off the lows on Matic, on Polygon. And that's actually a short-term positive. It doesn't mean you won't fall, but what I would do is I would look to buy, and I'm going to erase some of these lines so we can, and this is a level I will actually look to purchase Polygon at, this line right here. And again, I'm going to get rid of some of these other ones so people don't get confused. But basically, you get back a retrace here. I think it's a very attractive trend line. And again, for me, this is right around the 63-cent marker. So if you can get a fall into that, I'd be a buyer at 63 cents. Cardano had this little bit of an uptrend. It failed, but it's still holding here. It's starting to inch up. Not an amazing chart by any stretch, but you do have a level to trade against, which is pretty close, right around the 40-cent level. That would be a level that you want to see it hold. It's at 45 cents right now. And then let's look at Polkadot here and see what we got on Polkadot. And then, by the way, these aren't necessarily my favorites, but these are some of the bigger ones to look at. And the chart is much the same here. You know, you had this beautiful pop. It's come back in. Now you need to see these levels hold. You know, to me, you're going to have a lot of resistance around 780. If it gets through 780, it might run to 950 on the Polkadot chart. But again, definitely not an amazing chart here either. I'm trying to think of what other ones could be useful to look at. Let's take a look at BNB, Binance. Yeah, Binance is not a horrendous chart. You know, you have broken below this kind of upsloping channel, But if you look at how far off the lows it is, that's a really nice move off the lows. Now, again, I still wouldn't be a buyer until it probably gets down to like 245 or so down here. But again, I like charts that in as we're seeing Bitcoin come down, getting close to its recent June lows, they're holding well above. It shows that relative strength. And if you get a bounce, those should be the ones that perform the best.